I'm going to continue with this problem and doing part 2 of it. And this is chapter 4 for problem 1A. We completed in part 1 the income statement. Now I'm going to go down here to part number 2, and it says prepare the retained earnings statement for the year. So the first thing we're going to start with is the beginning balance of the retained earnings statement at the beginning of the year, and that would have been August 1st. Since our year end July 31st, it started August 1st a year ago. So we'll take that, and then I need the amount, and the amount from that page, that trial balance, was 363,700. Oops, 363,700. And I'm taking that number from right here. Oh, I'm sorry. Grabbed the wrong number. I need 128,100 is what I need. 128,100. So I grabbed the wrong one. So 128,100 is my beginning balance. I'm going to add to this my net income, which we computed in the part 1, which is the 147,800. So I put the 147,800 here. The next item I'm going to do is I'm going to deduct the dividends that we paid during the year, so less the dividends. And up on the adjusted trial balance, the dividends were $10,000. So that's going to be deducted. I'll have an increase in my retained earnings because my net income is greater than the dividends I paid, so I'll have an increase in my retained earnings. I will take the net income, subtract the dividends from it, so that's 137,800. And then I will have my retained earnings balance at the end of the period. That's July 31st, 2014. I'm going to add these two numbers together, and that is 128,100 plus 137,800. That equals 265,900. 265,900. And put that in. Let's go ahead and check our work here. And we did a good job here. So, doing part 3, it says prepare the balance sheet. We're going to do the same thing. Going to the balance sheet, we're going to grab the numbers from the adjusted trial balance. So if we take the adjusted trial balance, first thing I'm going to list is cash. And the amount is 10,800. The next thing is going to be accounts receivable, and accounts receivable is 43,300. Now you notice it's saying incorrect. That's because I had no answer there when I checked my work. The next item is prepaid insurance. Prepaid insurance is 1,700. I have supplies. These are the supplies that are on hand that haven't been used yet. I have 900 left. My total assets, I'll find that total current assets, excuse me. We'll add these numbers together. Reporting again. So my total current assets will be 56,700. I added all these numbers together here to come up with that total. Next, the property, plant, and equipment. We have a building. I'm sorry, we have land first. So I'm looking at that trial balance on line 12. The land is $98,000. Line 13 is the building. So we'll list the building. And the building is $400,000. We have depreciation on the building. So we'll take less the accumulated depreciation. And the depreciation of the building is $206,900. $206,900. Our net book value is the difference between these two numbers. And that's going to be $193,100. And we can continue on with our trial balance and the balance sheet. We have equipment listed next. It had an original cost of $101,000. We have depreciation that's been accumulating on it, so we'll subtract our accumulated depreciation. And the accumulated depreciation on the equipment is $89,300. So I've come up with the net book value of the equipment, the net book value of the building, and the original cost of the land. I'm going to add these three together to come up with my total property, plant, and equipment. And that is $193,100. And the total assets then would be my total current assets plus my property, plant, and equipment. Adding those together. $552,600. The next thing I need to do is the liabilities and stockholders' equity section. The first liability, I'm going to go ahead and list all this, and then we'll just do our addition later. I'm going to list the accounts payable, which is 15,000 accounts payable. 15,700. And I have my salaries and wages payable. $1,800. We have unearned revenue or unearned rent, and the unearned rent is $1,100. I'm going to come up with a total here in a minute. I'm going to go ahead and go down here and we'll list our capital stock, which is $75,000. We're going to enter our retained earnings. The retained earnings amount, remember, was $265,900. Now I'm going to add the current liabilities together to come up with a total. My stockholders' equity come up total, and then I'll add these two together to come up with the total liabilities and stockholders' equity. So I have entered the total of the current liabilities, the total stockholders' equity, and the total liabilities and stockholders' equity by adding these numbers together, adding these two numbers together, and then adding these two together. I compare that to my total assets, and my total assets agree, so I'm in balance and everything's good in the world. Let's post this up to the internet.